Hey everybody, happy Wednesday. Let's get right to it. Apologies for having to move it back an hour, but let's get rolling. All right. So, uh, looking at the charts that we had last week, pretty much I would say hold on, this out of the way. Last Wednesday is when we had, we were just about ready to take a dive here. So last week we were talking about this, potential, ABC sort of setup. And to make this sort of like a little higher B wave. But what we ended up seeing, of course, was this more little vicious kind of 5 wave down situation here. But as you guys all know, it had a pretty decent bounce, and pretty much what we're seeing here today, I believe, is some sort of just retracement in general. But we're trying to figure out where it's going to stop. So we, a lot of this stuff has been news based or news driven, and what we're trying to figure out here is where all this is gonna really, I guess, peak. So on a separate couple of time frames here, you can see this retracement hit the 50%, like the 50% retracement level, and it's that's at like the 24,100 level. And if you look at something like the S&P, I believe it's a little bit. Sorry, if you look at, it's a little bit less than like the Nasdaq, but still, when you're looking at the Nasdaq here, you can also draw the different. You can draw different retracement levels, and you could still see that like on the major time frames here. For these major wave movements, these like peak to trough moves, we do have some pretty, I think, pretty strong resistance here at this 24,100 level. So you've got multiple time frames here where you have just kind of like a confluence here. Plus, also we get some overbought ratings and things like that. So for another view, we can also start to measure this last leg down, and we can also try to figure out and see like where it might go here. But before doing any bullish or bearish paths, just kind of want to show you guys the setup. So I think what we're seeing here is like a three. It's called I would bore you guys to death with all the terminology, but it's called like a triple zigzag, where you can make the argument here that this leg is prepared to extend. So you can make the argument that this is just a bunch of ABCs, and it is, and it starts to get a little bit complicated once you start to measure all these different pieces. So if you start to measure one wave and that wave, it doesn't really matter. It all kind of concludes right around here or close to. So we'll kind of draw that line in the sand here, and we'll start try to draw some more measurements and show you guys what might happen here. So yes, I do think that this is the C leg of a longer sort of path, but you can also see kind of that convergence right here. So I'm going to mark two spots. So again, this like 24,100 kind of level here. I think this is the level that bulls need to beat and then get over if they're ever going to keep this rally sustained here. So I think that we're going to have some sort of news or something tonight. There was I'd say a pretty decent amount of resistance that this afternoon. You also saw some higher volume selling. So I wonder if that's maybe sellers testing buy support. Bulls have to spend a lot of money to keep it up today, but we're supposed to get some sort of press conference or whatever tonight, or announcement from president. So we'll see what happens. If it's anything regarding a escalation with Iran, then I definitely think it's going to have a bearish sort of vibe to it. This rally went up just crazy high, crazy fast. I mean, yesterday was up 3.5%. Today was 2%. Like that's a lot of ground to cover in a lot of in a very short amount of time. But you can also see here that that's not. I wouldn't say that that's kind of difficult to understand. I mean, we've seen a lot of this happen too over the last couple of weeks and months, where you see these very fast buy ups, and it's kind of funny too, because a lot of these fast buy-ups coincide with accusations of insider trading and news headline based sort of trading. I'm going to stay out of that one, but I just find it funny that you see a lot of these different spikes that are generated just out of news headlines in general. So that's so I would say kind of start out here with, I think the base case for some sort of bearish continuation is really just the back half of this last pattern. I like this last bit, I would say last week, like Thursday, Friday, it was pretty brutal, but I know it wasn't really like a capitulation sort of move, where the selling is like super fast and you get like a gap down in the morning kind of thing. We haven't really seen that with the sell side. It's been very controlled, but with the buy side, we've seen a lot of gaps. So if you look at something like QQQ here, you see a lot of these different like gaps here. Okay, so to be fair, sure, you could see one there, but it was recovered quickly. But we've just got a big one down here. We got another one up here. So that's two gaps. We've got a lot of these. If you look back in history here over over the shape of this correction, you can really just see that there's no like big massive gaps down overnight here. You see a gap up. You see another one over here. You see a tiny one over here that was retraced very early in the morning, and another one that was retraced very early in the morning. But all of them have been retraced. Usually, when you see some sort of like a wave three or something, you don't get a lot of recovery, like you saw here. And this is very fast. If you had bought the dip on Friday, which we did, then well, at least to improve cost basis here, then you did very well this week so far. But now it's time to take a step back and sort of think about what's going to happen next. So overall for indexes, I think the bearish case is something related, where you might be able to see something like this. I don't know if it's going to be like a 5-wave or something like that. It's just an example, but I think that it's entirely possible we can get down to this 22,580 level fairly quickly here, because if it was a capitulation move, or if it is going to be a capitulation move on the bearish side, then it's going to move very, very fast. So don't be surprised if it moves fast and furious there. More than likely, you'll probably see some sort of like stair step down again, but it's probably going to be a little bit quicker. Sort of like we saw this, like I said, like back on Friday. It was just a continuation. There wasn't a lot of buy interest. There was a lot of sell pressure, and we're seeing the opposite of that today. So we're seeing a lot of high buying pressure and stuff. But I do think it was also, again, just a news-based catalyst. All right, so that's enough about the bearish case. Easter's coming up here, and they're not going to want to drop a bunch of news bombs. That's going to be bearish. So I'm actually kind of thinking that this is, I'm trying to think through this a bit and trying to understand, what the motivation is. Nobody likes the high price of oil, but they got to finish the job in Iran first. So that's what they're saying. So if it's only going to be a 2 or 3 week sort of thing, which is what they said about the Russian special military operation, which is still going after a couple of years, I don't think it'll be like that. But I do think that there is a lot of pressure to end something or declare victory or say, hey, we're close to something, because they want to try to keep the price of oil down, because these things can spiral out of control, as you've seen already, where we're starting to see the impacts of higher gas prices around around a gas pump near you. So I think overall this is I think probably the better path, but we also have to be considerate of the bullish path as well, because they have been on a tear lately. So I think the first step to look at from a bullish scenario is to think about how far it's gone and then what the most likely target is. I still think out of any bearish or bullish scenario, you're going to get some sort of pullback. I don't know if this is going to be realistic or not, but just as a model, let's try to assume here that if we do get a pullback, bulls are going to want a kind of a better price. So I don't really expect them to kind of jump at like these, 0.382 levels, 0.5 maybe, but I've been seeing a lot of these reversals at like a 0.618 or even deep. Um, so, so with that being said, oh, sorry, 1 second. I got something. Okay. So with that being said here, I think that, you'll probably see some sort of, pullback. We've got some, other, fib levels and things that it could potentially bounce on. So I would say that there's a lot of support here between like the 23,400s and, the 23,300s. Now the option structure is setting up to be bullish, I guess, for the next couple days. But there were still some buying in VIX today to pile into a bit more of a volatility trade. So if we do get that final kind of capitulation move lower, the VIX did have a pretty decent volatility crush over the last day and a half here. So I guess you probably wouldn't see more than something like this until the next webinar. So from a bullish standpoint, you can just take it in little chips like this, or little time horizons. I think this is pretty reasonable. You'll probably see some more consolidation, especially if we had a gap we have to fill for QQQ or SPY, something like that. We still have those technical things that need to be satisfied first before we can really do much. Now, I would say there's a strong possibility if the bulls can keep the rally going, if we keep getting good news about Iran, let's say it actually ends, something like that, then I still think you'll get something that extends a little bit higher. So something that maybe goes to like the 24,870 level. And if you kind of zoom out a little bit from the last peak to trough, that actually aligns pretty well here with this 0.618 level. And I think that this is probably going to be your top for a bit. So yeah, these are kind of like the three levels to really watch for here. Now, if I switch over to the S&P, the S&P is a little bit different. I think it's making actually a slightly different pattern, but still very similar. I think it did actually hit the this was the bear target 1 on the charts I send out every day. So it hit it, it tapped it just real quick, and then it bounced back up. What I do think you'll probably see here is an extension lower. So I think you might see, and again, it's just like a series here of the same sort of ABC patterns. You get a similar extension, like this first one that we had, this first move. It did head all the way down to this 1.382 level, which is pretty strong for a C leg, and there's volume's been picking up for sure, but these things do have a tendency to repeat themselves within the same type of pattern. So that's where we start to measure at the different time frames. So that's why you want to start at the peak and then go to like the next obvious drop, and then kind of redraw your measurements. And then I think that a fair assumption here is going to be some sort of termination at the 6250 level. I mean, you see how clean that looks too. It's very, to me at least, it's very clear, like how that kind of aligns with some of these different charts. So if I draw just one more sort of drawing here, so let's do another peak to trough. The one that we had, like that big spike that we had the other day. This one doesn't really align super well, but it's still like a midpoint pattern. And every time you try to, here, I guess that's probably a better way to show it. Yeah, you start to see these sort of things take shape, like channels, and just general, like stay within the lines kind of thing. Now I would say it's broadening, but you can also start to draw like wedge shapes, and the wedges do typically play out with 5 individual waves, and it can be a little difficult to see, but I guess long term, this does turn into some sort of bullish pattern, but typically you see the pattern finish up first. So you'll see something, maybe like this, and then you'll see like a recovery and a kind of consolidation, then it breaks back up. But if this is going to be a longer term sort of correction or sideways chop, then you can definitely expect this, this range in the 6,000s to be, your new home for at least 6 months. But still, there should be a decent amount of volatility to be had. But you can also start to see here that, pretty clearly we have a significant amount of sell delta at the top here. So in my opinion, this does look like a major top. But I've been saying that for a while, and we still keep getting a lot of these like news headlines and things. I think that you're not going to see a lot of, probably not a lot of like crazy movement until after the election. That's if we can get some better news and get a more bullish cycle to take hold here. But just kind of zooming out, I don't think that this is looking like a very healthy structure. It kind of just looks like a double top right now, and we've got these big buy spikes, but nothing that really, nothing that's really going to give us, like super strong momentum anymore. I mean, like there's, ever since, I'd say January, February, there's been a lot more news of layoffs. There's been a lot more, concerns about AI, things like that. You've just seen a slower, or you've seen a bit of faster deterioration in the macro environment, especially with oil being as high as it is. That's always going to be a problem itself. Okay, so that's the bull bear scenario. We'll see what happens here. But that's the world as I see it right now. All right, so let's take a look at the yield. So I think the yield's probably going to spike a bit more. Probably head up here to, maybe test this bull target 1 level again, and then probably head back up. And this should be bearish for equities as well. So even if we do get a like a small dip, something like that, and it still remains bullish, then I would expect to see some better news on inflation. Like in my opinion, like oil would need to come down significantly quickly in order for this, in order for the yield to back down this much. And actually, so since they're kind of intertwined here, let's look at the oil chart. This one's important. So everything kind of is pegged off oil these days. What we've seen here so far, this does look like a incomplete, I guess, like a sea leg. So I guess what I mean by this is, so if we do these kind of measurements, I kind of think that you'll see something similar to this, where let's do some measurements here, where if we're looking at oil, so the A equals C sort of, well, there you go, freehand. That ends up being the bull target 2. Oh, let me adjust it a bit down. Okay, so the bull target 2 here is back at that 110, and 110 is kind of like that crazy level where if oil gets that high, like it will force some trading hands here. Now, I guess within the C leg, so let me kind of back it up. It's kind of looking like we're seeing like a 5-wave sort of structure here, where I can see the wave 3 in here, and we had a bit of a dip for wave 4, but it's still technically valid. And this is kind of what I think is going to happen here with oil. I think you're going to get a higher sort of channel like this, and then you'll get a drop after that. But I think that if you do see this wave 4 and 5 with oil, you will see that last capitulation leg down with equities, no matter what. I just think the cycle just hasn't quite finished yet. I think the sellers got steamrolled again, but I feel like some of them knew it was coming. Like I could kind of feel it on Friday when we had that not capitulation, but it was like this slow, steady grind. It just kept dropping and dropping, and no buyer interest, that kind of thing. But we all kind of knew that something was going to happen over the weekend. It wasn't like April where you woke up on Monday after a bad open on Sunday and markets are down 5%. And there's nothing you can do about it. So that is that's kind of the prognosis here for oil. I just can't really see it going down unless there's some sort of positive development with the Iran conflict. And it sounds like they want some more. It sounds like they want some more guarantees, like the Strait of Hormuz, and like a lot of those other things that I don't think they're going to get. So yeah, we'll see. We'll probably get more information tonight. All right, so that's oil and the yield. So like I said, oil up, equities down, yield up, equities down, and they're both, all three of those are kind of joined at the hip. Now, what's interesting to me, at least, is that gold is gold's kind of marching to the beat of its own drummer right now. It's sort of decoupled from it's decoupled from equities, it's decoupled from tracing the yield, that kind of thing. Like it's I mean, well, no, it's always been kind of inverse of the yield, but you do see a lot of buying here with gold, and I'm actually I'm thinking that part of that is probably just inflation concerns. If you draw like a kind of a triangle or wedge pattern or whatever you want to call it, I still think that we're getting close here to maybe seeing some sort of like a pullback. Excuse me. Which see some sort of pullback here. But I think gold's probably going to extend up here, maybe a little bit higher yet. Run into some resistance at the 50, as that this purple line is, and then you'll probably see some sort of back down and charge up. Now silver's a little bit different. Silver's a little bit more muted, but I still think you'll probably see some sort of reach up here. So tomorrow I'll have another bull target there, but you can also kind of see here that's the point of control too. It's funny how these things align. Okay, so yeah, metals up, oil, metal, yields, equities down. That's kind of the summary. Natural gas has been kind of pissing me off again. It's just such a weird thing to trade. Like, you would think one thing that would be a bullish catalyst and then it ends up not being. But I think that, again, if you get oil that screams up a bit, you will get some sort of some movement here in natural gas. So currently long, but not a whole lot, just long enough, I guess, long enough for gas. All right, so semiconductors. I was joking about this earlier today, where I mean, it literally had a straight line up here. Like, what the hell? Like, okay. So everybody's buying the dip and getting nuts, but this index is also so heavily weighted that, like, you can just tell that there's such a concentration of capital that's driving up markets right now into like a handful of names. Yeah, market breadth has improved a little bit, but not anything like of significant, significant mention at this point. Stocks has also got to the point too where it had such a crazy fast run up that it's also running into these other pretty key Fibonacci levels. So this 343 I had on the target list for a while. So now I think if you zoom out, you're probably going to get this sort of C leg, and I think that if you do get kind of zooming back to the Nasdaq here, if you do get this sort of bigger leg down, you're going to have semiconductors participate in that. So my goal here is I would like to get out of the SOXS trade, the short stocks trade, but I think that you'll still have another kind of move lower here. So if we kind of look at Nvidia, it's got like the same sort of thing. It's been kind of stagnant and sitting there for forever, but now we have seen that first ABC. Now we're seeing, I think, this B wave up, which means that the next step is something like this. So it remains to be seen yet. But all right, so now Bitcoin has been increasing, but there's also been some seriously declining volume. I think that you'll probably see a bit more retracement higher, but I'm just not sure yet. I don't know if you'll get a completion of this pattern. We might get another wave up before see a continuation lower. So since these two are peas in a pod, if you look at MSTR, it's probably got a little bit more room to run here, but it requires Bitcoin participation, of course. I think from a charting perspective, it's a pretty clear like ABC down here. So the MSTU might not be a bad pickup, but again, this sticker's cursed. made some decent money off it, but man, this thing just doesn't do what you want it to do. All right, Tesla's last one here. Tesla kind of ended the day high. I think that the news about the SpaceX stuff is kind of buoying the stock a bit. I like Tesla. I think that it hit a longer term sort of pivot point here. So I'm trying to figure out where a good stopping point would be. All right, guys. Well, that's pretty much it here. That's the abridged version today. But yeah, thanks for watching the video, and we'll see what happens tonight. All right, have a good night, everybody.